Good morning, everyone. Jesse Webb, TradersPro. Quite a bit to talk about this morning here. We've had a pretty ugly week last week, and so let's jump right into it. Number one, our long-term indicator, this long-term signal has gone back to bearish in a bear market, and so the continuation of this bearish slide is underway and is still intact significantly. So bearish bias, essentially what that means is, in this case, considering a bearish stance, whether that's shorting stocks, buying inverse ETFs, buying put options, those are the more aggressive type trades, or just cash, moving to cash, making some kind of adjustments there just to preserve capital, just to preserve risk if this downtrend continues. That's a part of the idea of trend following, is that we're looking for a current trend that's underway to continue that trend, and sometimes that's a slow process. Sometimes it's very whippy, where you're getting a lot of potential false signals, especially around a bottom, when you're getting move up and a move down and a move back up and a move back down. It becomes pretty frustrating, and that's why bear markets are so difficult, is because they are frustrating. We're continually looking for it to go back up, go back up, go back up, but the overall trend is still down. And so if that overall bias still needs to be in place in terms of this perspective, that's why this is a top-down approach. That's why this is at the top of this page, is that this is the overall bias going in, understanding we're in a bear market. How do I manage my trades and manage my portfolio, understanding that should be my overall top-down direction. We're in a bear market, in a downtrend. I can't just go in and actively be buying the way that I normally would in a bull market, where you're buying the dips. The conditions just are not warranted for that. So that being said, we also are now, we're now on a lot of these indicators starting to slide back down into this range. Sentiment, though, is still very high, and this is the only real concerning piece. This cannot stay this high in order for a bottom to be in place. So this is going to be the one to be watching over the next few weeks. Breadth has come back in, that's 62, so that's sitting back down at these ranges. Momentum's back down to 38, so that's starting to drop pretty aggressively with this most recent sell-off that we've seen. What that looks like, well, let's look at buy-sell ratio, because that also is widening, pretty aggressive widening over the last couple of days, moving that back to 0.25. That can bottom out. The lowest range is really, really low, 0.03, 0.02, 0.04, 0.05, you can see. So if we are, if we are here, this move right here, and this, if we're in this range, then we potentially could have a lot more to come in terms of either and or volatility and downside. So we'll keep an eye on that. Sentiment is also one to watch, because we're now approaching the lower end of that range where we can get a reversal type bounce. So we'll keep an eye on sentiment as well, but not quite yet. We're definitely with that bearish stance right here. Although that being said, remember, there's always going to be pockets of stocks that are working. The best place to look is at that new buy list, and then look for that theme that's happening. We're definitely seeing one with these medical and biotech stocks. If we scan through these, we're going to see quite a few of them that they're trending nicely. Even though the market's been dropping, they're trending nicely, and they've been consolidating here for a little bit. So we're now getting these ranges of consolidation with potential breakout, and a lot of these are having this. That's that bullish profile, that trend profile that I like to look for. It's very easy just to pop up a chart and glance to see that. Now the continuation of this, obviously, if we get a breakout, continuation is what we would like to see. And if the market really unwinds right here, even more so, then some of these stocks may not work. That's the risk that we take in buying into a bear market. So again, just be aware of that. But these pockets are working right now, some of these biotechs. There are some silver and gold stocks that are starting to pop. MAG, a silver stock that looks really good right here, other than that longer term downtrend. But it's got a pretty nice looking chart set up here with an uptrend, a breakout of this range, kind of this consolidation, and then a good confirmation bar right here. Keep an eye on that. There was another little gold stock I saw in here. Gold stock here, ORLA. So you're seeing Biomed, you're seeing some gold and silver. There were a couple of other construction type stocks I saw in here, which were interesting. There may be some perspective that there's going to be, again, remember that the stock market, the economy acts way slower than the stock market. So more than likely we will dip into recession. The market's kind of anticipating that, and we'll see if some of these companies are able to spend and move forward that way. So there's some good looking stocks in there to look for. There's a lot of them in there, so kind of keep towards this upper range of rank are the ones to be able to keep an eye on. If you don't have full access to the site, give us a try with the link below, and we look forward to having you. Have a great day today.